With RJ Hotavi, he's restaurant analyst at Morningstar, and Harry Rady, he's CEO of Rady Asset Management. Guys, good to see you. RJ, let me start with you. We've seen a lot of these stocks run up pretty dramatically based on the assumption that we are going to see an improving economy in the second half, and then naturally people will eat out more. Is that logic correct, do you think?
Yeah, I think that is absolutely correct. We've seen a number of stocks, particularly in the casual dining space, really run up since the beginning of March. I really think the casual space has kind of gotten ahead of itself, and right now I think actually the quick service restaurant space is a much better, more attractive on a valuation
basis. So casual dining, you think a lot of that stuff is priced in, so the Dardens, the Brinkers, the Cheesecake Factories?
Yeah, I think they've gotten ahead of themselves. Again, you know, people looking to the back half of the year, maybe a little bit premature. Okay. I think we're looking at, you know, that they're at best appropriately valued. But
quick serve, that would be the McDonald's, for example, the Yum Brands of the world. Do you think they still have room to go?
I think they do. I think we may see a little bit of weakness on the top line coming up in the back half of the year. But what I'm looking at is that the companies have done a great job streamlining their business operations. Cost structures look like they're in good position. And they get a great tailwind with commodity costs coming back this back half of the year. So I think from my perspective, valuations look great on that end.
Okay, Harry, casual dining space, a lot of those stocks are at 52-week highs. What do you think? Have they run too far too fast?
Well, we're contrarian investors, and we're deep value investors. So we like to buy stocks at their 52-week low. Many of these stocks are trading at their 52-week high. Now, that's not the end of the world because we also short stocks. So we're seeing a lot of short opportunities. And so we see these stocks in two different categories. Ones that are trading at their 52-week high where we think there's too much euphoria built into the stock, and we see those as great short opportunities. And then we see some of these stocks kind of trading in teen multiples, kind of trading in the middle of their range, and we view those as fairly valued. And, you know, some of the ones that we think are in the overvalued short candidate category would be the Cheesecake Factories, the Chipotle Mexican groups, the California Pizza Kitchens. But on the long side, we own Morton's Restaurant Group. Morton's Restaurant Group is trading at 40% of book value. We think the company has $1.50 of earnings power. The stock's at $3.50 now. We think it's a quadruple.
All right, and we want to warn people, of course, you know, the novice viewer, when they talk about shorting stocks, that means you borrow it, you sell it, and then you hope that the price goes down so you can buy it back cheaper later. But if it keeps going up, you've got a lot of risk on the table, unlimited risk, as opposed to when you own a stock outright. What about the issue of inflation? There's so much debate about inflation, whether or not we're going to see it, because the Fed is essentially printing money, and these companies, they have so much commodity exposure. RJ, how much should they be worried about that, or can we just put that aside for right now?
You know, it is a little bit of a concern, but generally, you know, these companies have been fairly resilient to that front. It's not too big of a concern for me.
How about you, Harry?
You know, the space is so expensive right now that I think that they're vulnerable to lots of variables, and that could be one of them. You know, when these stocks are trading at 20 times earnings in a cyclical, consumer discretionary-oriented space, highly competitive, you know, 20 times earnings just seems ludicrous to me.
Got it. All right, good discussion, guys.
Thanks.
RJ and Harry, thanks for
Michelle.
joining us. Stocks lower for a second.